Good morning. Happy Friday. Gonna give folks a few moments to join.
Hi, everyone. Welcome.
Hi, good morning.
Wow, the number just keeps growing. We're so excited,
I know
everyone.
119, 124, 129, 135. Awesome. Well, we're gonna go ahead and jump right in. We have a lot of material to cover. Super excited to spend the next hour together. Really grateful for your time and attention on a Friday. I know you are very busy as a therapist, so just really appreciate you being here with us. And if you're watching the recording, really appreciate your time as well. We're going to be spending the next hour talking about how to prepare for tax season. It's a great time to start preparing, even though it's November, and you may think, well, taxes aren't due until April. That's 6 months from now. There's a lot that you can do today and over the next few months before the end of the year to set yourself up for success so tax season doesn't have to feel so stressful. Just a few housekeeping items here. We had over 1,200 therapists register for this webinar, which is incredible. It also means that the chat gets very noisy. So we've disabled the chat, but there is a Q&A feature. So at the bottom of your Zoom window, you should see a chat bubble that has a question mark in it. If you have questions during the webinar, please drop them in the Q&A. We'll stop throughout and then we'll save time at the end. It's a lot more fun when we have questions answered. It feels a lot more interactive and not like we're just here talking to ourselves. So please drop questions if you have them. This is being recorded. I'll mention that a few times as people join late. So if you have to drop off early, if you have a client at the top of the hour, don't worry, we'll email you the recording and we'll also email the slides to you. Just a quick disclaimer about questions. We may not be able to answer your question if it's about your personal tax situation, just because we don't have full context. That would be a great question for our tax team at Herd if you do decide to become a member. And then also, you may have the same question as someone else. You'll notice that within the Q&A, you're able to upvote questions. So I would encourage you, if you have a question, see if someone else has already asked it, just to keep the Q&A from getting cluttered.
Hey, Michael, just quick housekeeping item here. It looks like I'm going to be sending, hi, everyone. I'm going to be sending some links in our chat, and I don't see the ability to send to everyone. So just not wondering if that's something you can enable on your end.
Yes.
Thank you.
Sorry about that.
Oh, all good. That is good to go. And then on your screen share, just want to make sure that is up and running too.
That would be helpful.
All
Cool.
good. Thank
All
you.
right, off to a good start. Great. So quick intros. My name is Michael. I host our podcast here at Herd Business School, also the director of brand. I've been working with mental health professionals in a variety of capacities my entire career over the last 13 years or so. And Melanie is also here. Melanie is our head of marketing. She'll be managing the Q&A and she'll be sharing resources in the chat. Quick overview of what we're going to be talking about over the next hour or so. Quick description of Herd and what we do, how we support therapists. We're going to review important tax deadlines that are good for you to know about. We're also going to talk about how to choose how to file your taxes, what the various options are. We're going to talk about organizing your finances before year end, what that looks like. We'll talk about what tax forms you need when you go to file your taxes in the beginning of next year. We'll also talk about how to avoid IRS penalties, which I know is a source of stress for a lot of folks. And finally, we'll talk about how to lower your tax bill, because everyone loves paying less in taxes. Great. So if you're not familiar with Herd, if this is your first time attending one of our webinars, we are the only accounting platform for therapists. We empower therapists as business owners with software and access to experts. We save therapists time. On average, we save therapists 60 hours a year, which is pretty significant. That opens up, your schedule to see more clients or even spend more time with your family. And we also love saving therapists money. So on average, we save therapists $5,000 a year on their taxes. We are offering limited time pricing right now for tax season. If you're interested in learning more about Herd and how we can support your business, we offer free consultation calls. This is our busiest time of year from now until the end of the year. And so these spots do fill up. If you're interested in learning more about Herd, I recommend just pulling out your phone, scanning this code, and taking 30 seconds, fill out the form to book that free call. Mel will drop the link in the chat as well. All right, I'm going to throw a quick poll up. Let us know how you're feeling about the upcoming tax season. Confident, a little nervous, or really stressed? All right, get your answers in. All right, looks like 65% feeling a little bit nervous, totally normal. 26% feeling really stressed, also normal. 9% feeling confident. That's awesome. So hopefully by the end of this presentation, those folks who are feeling really stressed feel a little bit more confident. All right, so let's start with important tax deadlines and the dates that you need to know kind of moving forward as we head into tax season. So the first two are actually Herd deadlines. So if you're interested in getting help from Herd to help manage your taxes, these are some important dates that are coming up. So if you are interested in getting help from Herd to estimate your final quarterly tax payment, so this is that Q4 quarterly tax payment, you would have to sign up for Herd by the end of November. If you're interested in Herd doing your taxes for 2024, and also if you want to take advantage of our limited time pricing that we're offering right now, you would just have to sign up for Herd by the end of the year. January 15th is an important date. That's the deadline to make your final quarterly tax payment for 2024. I know it seems weird. It's in 2025 and it's for 2024. We're going to talk about towards the end of this presentation why that payment is important for reducing penalties if you haven't been paying quarterly taxes so far this year. January 31st is another benchmark. That's the deadline to submit 1099s. So if you are working as an independent contractor as a 1099, you will receive a 1099 from your employer in January. If they wait until the end of January, you might receive it in early February. The thing to know here is if you employ someone else and you've paid them $600 or more during the tax year, you are required to send them a 1099. You send one to the IRS and you send a copy to them. They need that to do their own taxes. So $600 or more, if you've paid someone that this year, you're required to send them a 1099. The next deadline is March 15th. So this is the deadline for S corporations to file their business tax return. So if you're an S corp, you file your 1120S, you or your CPA, by March 15th. You can also file an extension, which gives you more time to file your business tax return. And then April 15th is tax day. This is when everyone has to file their personal tax return by. That's your form 1040, which is your personal tax return. And as a self-employed therapist, you'll also file with your personal tax return a additional tax form called a Schedule C that reports your business income and expenses. We're going to talk about those forms later on. You can also file an extension by April 15th. Something to note here is you don't have to wait until March 15th or April 15th. You can file early, which a lot of people do. but sometimes it just gets held up if you're waiting for tax forms. I'm going to stop here. Any questions so far?
Nothing too specific on these deadlines, and I think just for reference, everyone, I also sent through a helpful tax hub that we have here at Herd. So if you ever want to reference all of these dates, since I know there's a lot of them, make sure you check out that link in our chat.
Awesome. And for folks who joined late, this is being recorded. We'll send out the recording later this afternoon if you have to jump off early. The chat has been disabled just because the group is so large, but the Q&A is open. So if you have questions, please drop them in the Q&A and Melanie will be monitoring that. All right, time for another poll. Great. So I put up another poll up on your screen. Curious how you filed taxes last tax season. Did you do it yourself? Did you have a friend or family member? Did you work with a local CPA? Did you use Herd? Or did you use a online accounting firm? Give folks a few minutes here. Not minutes, I should say. That would be a long time, a few moments. Great, get your answer in. All right, looks like, that's interesting. 42% did it yourself, probably using software like TurboTax, I would assume. 42% worked with a local CPA. 9% worked with a family member or friend. 2% used Herd. And then 5% used another accounting platform. Great. So when we start to think about how to prepare for tax season, the first question that we want to answer is how we're going to be filing our taxes. So let's talk about the various options that are available to you. So the first is doing it yourself. If you've had a W-2 job, this is probably how you filed taxes up until now, because as a W-2 employee, taxes are pretty easy, right? Your taxes are withheld from your paycheck. You get a W-2 in the mail in January. You go online, you punch in the numbers to TurboTax, and you probably get a refund. So the pro of using TurboTax doing it yourself is that it's less expensive. There's even a free version, but the cons of doing it yourself is that it's more time consuming if you're doing it versus hiring someone else to do it. There's the possibility of missing deductions and write-offs. And also there's the possibility of making errors, which could result in penalties and fees. So depending on your preference and kind of risk tolerance here, that could be a good option for you. Same thing here with working with a family member or a friend. We talk to therapists, a lot who their spouse did their tax return, or they have a friend of the family who does their taxes every year. Totally fine, but same thing here. Opportunity for errors, and depending on the relationship, the cost may vary. Working with the local CPA is a great option, popular option. 42% of folks here worked with a local CPA last year. One benefit is that if they're in your town or your community, you can go sit with them and talk to them. But typically, a local CPA is not going to specialize in therapists or really kind of understand your business as a therapist. And they're usually also not going to provide bookkeeping services during the year. So you're probably going to have to go to them with your bookkeeping records, whether you do that yourself or you hire a bookkeeper during the year. So it's an additional cost. And the cost for a tax filing with a local CPA, it really varies. What we see is somewhere between $500 to $1,000. If you're an S corporation, going back to that last slide, you file a business tax return and a personal tax return. So, that can look something like, $500 for the personal and then $1,000 or $1,200 for the business tax return. So Herd is another option here. We have industry-specific software built for therapists, and we also have a wonderful support team as well. The trade-off with Herd is it is more of an investment. It is more expensive. We offer a monthly subscription that includes tax filing as well as monthly bookkeeping. It's $169 a month if billed annually, or if you pay annually, and then $199 billed monthly. That's for solo practices. Group practices are, I think, $255 and $299. And then another option, you can go with an online accounting firm. So you can think about this almost like a group practice, but for accountants. Typically, with an online accounting firm, you're gonna get a lot more kind of personalized support, and you might have a monthly meeting with your accountant, but they're also going to be more expensive, and they're probably going to use industry agnostic software like a QuickBooks to do your bookkeeping. And that can cost anywhere from $400 to $500 a month or more. One way to think about how to choose which tools to use for your business and kind of how to set up your financial system is based on your income or your revenue of your business. So this is not a one size fits all approach, but we like to provide this framework for folks, especially who are newer to private practice or who are just building their practice. So if you're making less than $10,000 a year from private practice, you can think about that as, you're around $1,000 a month in income. This could be, if you're just getting started, or if it's just a kind of side practice, maybe you're working as a independent contractor. You can probably get away tracking your income and your expenses using a spreadsheet, and then doing your own tax filing using TurboTax. You're probably not going to see the tax benefits and savings by working with a company like Herd, or even working with a tax preparer. Now, as you're building your practice, you can start to think about upgrading your financial systems for your business. So instead of using a spreadsheet, you can use bookkeeping software, start using bookkeeping software. QuickBooks is the most popular one. But again, that's you doing your own bookkeeping using software like QuickBooks, and then hiring a tax preparer. So that's that local CPA that I mentioned. So, and the way that we think about that is when you're at about $50,000 a year. So this is, you're between $4,000 or $5,000 a month, and this is in total income, right? So when you're at about $4,000 to $5,000 a month, it's a good time to start thinking about getting some more systems in place for your business. And then as you start to scale up, and now you're in more full-time private practice, you're doing, say, $5,000 a month in revenue, you're over $50,000 a year. That's when working with a full service company like Herd starts to make sense, and you start to see the benefit from that. Something else here I think is important to mention is the goals for your practice, and if you're intending to grow or not. So if you're, only interested in having a small practice on the side, maybe you have a full-time job, you're a teacher, an instructor and professor even, and you're building, just have a small practice on the side, and, you're not intending to grow, then it's probably okay just to have, a spreadsheet and use something like TurboTax. But if you're just getting started and you're intending to grow, it might be helpful to have that system in place for you that you can then build upon. So then you're not having to go back later and set that up for yourself. Anything here, Mel, to add?
No, I think we're getting a ton of great questions on what types of forms to file, depending
Yep.
on your situation, which I know we're about to cover in detail. So I think just some of the good context we got is that folks have, considered a local CPA before, and just knowing that that's a great option, but they don't know the nuance of private practice. And so something we pride ourselves in is that we only work with therapists. So we deeply understand what it's like to either be a 1099 contractor, have a W-2 job, and or being self-employed. And so that's really just kind of how we like to think about, the consideration there with Herd. But again, CPAs are great. especially with how Michael outlined it. So just wanted to kind of cover some of the conversation that we're having over here.
Yeah, something that we recommend to therapists who are looking into herd is to set up multiple conversations or consultations with different firms and different CPAs. Similar to if you were to look for a therapist, you might interview 3 or 4 before you decide. Same thing when selecting an accountant. Just want to make sure, it's the right fit for you and your business because, just like there's a variety of types of therapists and specialization, same thing with accountants. All right. So once you've made a decision about how you want to file your taxes, now the next step is to think about, okay, how do I get organized and how do I get my finances tax ready to go meet with that person who's doing my taxes? Or if you're doing it yourself. So you can think about this like a checklist. So there's a couple things you can do before year end. So the first is gathering all receipts for expenses over $75. This might seem like oddly specific. Why $75? The reasoning here is that what we've found is that, expenses that exceed $75 or more are more likely to raise eyebrows with the IRS. That doesn't mean that you're going to be audited if you have expenses over $75. It also doesn't mean that when you file your taxes, you have to submit all of your receipts. All that this means is you have good documentation. So in the event of an audit and the IRS says, "Hey, you said here that you spent $1,000 on a laptop. Do you have proof of that purchase?" Or this is interesting. You have $1,500 here for business meals. What were those meals? Right. So having those receipts is just best practice for record keeping. The nice thing is that most receipts these days, unless you go out to a restaurant, are going to be digital. Any purchases, like, say you bought a desk for your home office on Amazon, for example, great example of a business purchase, just making sure that you save that. With Herd, you're able to upload receipts to each transaction, which is really nice. I know, other software, you're able to do that as well. Catching up on bookkeeping before year end. This is a big one. Um, this doesn't need to be complicated. It could just be filling out a spreadsheet with your income and your expenses for each month. At Herd, this is something that we do for you. We get your books up to date, but just making sure that your bookkeeping is done before year end. Because if you go to a CPA or a tax preparer to do your taxes, they're going to ask you for your bookkeeping records. And then finally, reconciliation is an accounting process. And basically, all that means is looking at your bank statements and your credit card statements to make sure that the numbers add up. What could happen is you could make a personal purchase on a business credit card that gets then claimed in your books as a business expense, but it's really a personal expense. And now your expenses in your bookkeeping don't match what's in your credit card statements. So the process of reconciliation is just making sure that the numbers the numbers add up. Then in January, so once we get into the new year, you're going to get a W-2 in the mail if you have a W-2 job. This is if you're an employee. And then if you are an independent contractor, you'll get a 1099. Some of you on this call might get both a W-2 and 1099. Some may even get multiple 1099s. But as you get those, just don't put them in a drawer. Don't throw them away. Just make sure that you put them somewhere safe, put them in a folder, because you're going to need them when you go to do your taxes. The next one is downloading what's called merchant fee reports. So what this means is essentially credit card processing fees. So if you are using an EHR like Simple Practice to bill your clients, Simple Practice uses Stripe to process that credit card, and they're going to take 2 to 3% credit card processing fee. So that's why if you bill someone $100, you only get $93 deposited in your account. So there's, a difference there. You're able to write off those credit card processing fees as a business expense. So the way that you're able to see what those credit card processing fees were is through what's called a merchant fee report. It's a 1099-K. So you should be able to download that from Stripe or whoever is processing your credit cards. Ivy Pay is another one that a lot of therapists use. And then any other financial statements that may be helpful to take with you when you meet with your tax preparer, or when you sit down to go through TurboTax, or even at Herd, we ask you to upload these things. Financial statements can include any student loans. You're not able to write off your student loans, but you can write off the interest on your student loans. And so you'll need to know how much interest you paid this year. Your mortgage, you may be able to write off your mortgage insurance, any bills. So this is relevant with the home office deduction. So if you work from home and you're able to take advantage of the home office deduction, you're able to write off the percentage of business use of things like your mortgage, your utilities. One of the great benefits of being self-employed, but you have to have proof of those. You could just estimate what you think those costs were, and you might get away with it. But in the event of an audit, again, it's just best practice to have those records. I'm going to stop here. Any questions or topics that would be helpful to clarify?
Yeah, I think a good question is on if you're just getting started and right now using a personal account for any expenses,
Yeah,
is that okay? And just how to think about that.
it's definitely okay. I would say that best practice would be to separate business and personal finances, just in general. Um, you should have a separate bank account for your practice. Even if you're an independent contractor, just have a separate bank account. It doesn't need to be a business bank account. It can just be a separate bank account. So it's just easier to track the money that's coming in and then any expenses that you have, right? Because when you go to pay your taxes, you're not paying taxes on your total income. You're paying taxes on your income after your expenses, which is also called your net income, your profit. And so if you are making business purchases, or you have, say, you've signed up for Squarespace or you've signed up for Simple Practice and you've put that on a personal card instead of, a separate business account, no problem. But that's where those bookkeeping records become important. As long as it's somewhere being tracked, then you're okay. I would say as your business grows and you start to have more monthly transactions, it just becomes more cumbersome and more work to track that on your own. So going back to the kind of different options for managing the finances in your business, like if you have less than 10 transactions a month, you probably don't need to be paying for bookkeeping software, right? But if you have 50 to 100 transactions a month, it just becomes a lot more time. So um, I'll also say that, like, it happens, people will put stuff on their personal card or put stuff on their business card. All of that can be changed as long as there's a record of it somewhere.
Great. And then we had some good questions on the credit card processing fees. And so if you could just restate the form for that and then the category on Schedule C that's going under.
Yeah, it's a great question. So you will be able to download your just merchant fee report. So whatever you're using to process uh, payments, they should provide that to you. They should also send you a 1099-K in the mail. I know we just had a workshop with Thrizer yesterday, which is a great company that handles out-of-network billing for therapists, and they said that they'll send out a 1099-K in the mail. So good thing also if you're working as an independent contractor, and if they're charging credit card processing fees, you can also ask them if they plan to send you one, or if you need to request it or not. And then in terms of the specific line item on Schedule C, I'm not sure about that. I think we have a Schedule C slide, so it might have the actual expenses on there. Great. going to keep us moving. Okay, so sounds like there's some questions about which tax forms you'll need. So a quick overview, if we take a step back, um, let's talk about the difference between a W-2 and a 1099, which are both tax forms. So when you are a employee, you submit a W-4 to your employer, and then you receive a W-2 from them. So this is part of your onboarding packet. Whenever you start a job as an employee, they ask for your W-4, and the W-4 is kind of the purpose of that is how much they're going to withhold from your paycheck. So as a W-2 employee, taxes are withheld every paycheck, which makes managing your taxes a lot easier, right? They're just taken out, you never see it. And like I said earlier, you may even get a refund at the end of the year. Now, as an independent contractor, if you're working with a group practice, if you are working with a platform like Alma or Headway or Rula or Grow Therapy as an independent contractor, they're going to ask you when you start for what's called a W-9, and then they'll use the information on your W-9 to send you a 1099. So again, you'll get that 1099 probably in January. The deadline for employers to send it out is January 31st, so you could get it sometime in February as well. The important thing to note here is that unlike a W-2, where you can go on TurboTax and just punch in the numbers, on a 1099, the 1099 is showing your total income that they've paid you, but taxes have not been withheld. So you're responsible for paying tax on that income. Now, you're not paying tax on the income that's shown on your 1099, right? Because that's your total income. You're paying tax on your profit as a self-employed therapist. Even if you don't consider yourself a private practice owner, if you're a 1099 contractor, you're still self-employed. So some folks think, oh, I have to pay taxes on this amount that's on my 1099. That's not the case. You're able to reduce that number with any business expenses that you have, and we'll talk about that in a moment. Question that we get a lot is, well, what if I get both? I'm a W-2 employee, and then I also work as an independent contractor. How does that work? The way that I would recommend thinking about it is separating your W-2 income from your 1099 income for tax purposes. When you go to file your personal tax return, it all goes towards your total income as a taxpayer. But the difference is, as I mentioned, on your W-2 income, the taxes are already taken out, right? But on your 1099 income, they're not. So you're going to report this 1099 income on your Schedule C, which is part of your personal tax return, but it's separate from your W-2 income. So it's both income, but one is employee income and one is self-employed income. Great. So if you are a sole proprietor, which unless you have formed a business entity and you've elected for that business entity to be taxed as an S corp, you are probably taxed as a sole proprietor. If you don't form a business entity like an LLC or professional corporation, you are a sole proprietor by default. What you will file is a personal tax return. So I mentioned earlier, that's due on April 15th. And then you'll also file an additional form called a Schedule C. There's some confusion here. Well, what about is this a personal tax return? Is this a business tax return? You file at the same time. It's just one tax return. There's just an additional form called a Schedule C. It looks like this. You're probably not going to fill this out by hand, right? Most people these days use TurboTax if they're doing it on their own, or you go and you sit down and you meet with an accountant or a CPA and they have their own accounting version of TurboTax where they ask you a bunch of questions and they kind of fill this out for you. But the important thing to keep in mind here is that every taxpayer is responsible for submitting a Form 1040. This is if you file single or jointly. If you're married, filing jointly, you would each file a personal tax return. If you're married filing jointly, you would just file one 1040. And then your Schedule C is filed together. It's on the right here. It doesn't actually have the business expenses broken out. So that's where you would see where those merchant fees are. But yes, and then something else just to mention here is that Herd handles all this process for you. So we get all the information we need from you, and we have tax preparers that file these returns on your behalf. And then if you're an S corporation, which if you formed a business entity and then you elect for that business entity to be taxed as an S corporation, you have an additional tax return that's due on March 15th, excuse me. That's called a Form 1120S. And then you also have an additional form called a Schedule K1. The K1, the thing to know about that is that it's a report on your distributions as a shareholder. And then you file that K1 with your 1040. Again, we handle this for you, but just good to know, especially if you're considering S Corp or for next year. Great. I'm going to stop here. I know that was a lot. Any questions about tax forms specifically?
We had some just good questions on the type of entity you are and how to think about it. So for example, if I want to become an S Corp, is it too late for 2024 to benefit from S Corp status?
Likely, yes. So there's kind of two deadlines to elect to be taxed as an S Corp. The first is March 15th of that tax year. So essentially in 2024, if you already had a business entity that you formed before 2024, you would have until March 15th of this past year to elect to be taxed as an S Corp for the 2024 tax year. Now, if you formed a business entity during the year this year, say you started your own practice in June, you have 2 months and 15 days, which again feels like very specific, but you can just think about it as like March 15th is 2 months and 15 days after January 1st. So it's basically 2 months and 15 days after you form your business entity to elect for your business entity to be taxed as an S corporation for that tax year. There's also something called a late election where you can submit an application to the IRS for consideration. They may accept it, they may not. You have to make the argument why you missed the deadline. Our general recommendation at Herd is that that process can be complicated mid-year, and it's usually best to just wait until January, submit what's called Form 2553 to be taxed as an S corporation, and then, assuming it's accepted by the IRS, you're taxed as an S corp for the entire year. Your accounting, your bookkeeping, all your records are clean. You're an S corp for the year versus having to be taxed partially as a sole proprietor and partially as an S corp during the year. It's just more complicated from an accounting perspective, and typically it's not worth it. So our general recommendation would be just wait at this point. It's November, wait until January, and then start off 2025 as an S corporation. Cool. All right. So how do I avoid IRS penalties? This is a big question that we get a lot. Two things to note here are that if you haven't paid quarterly taxes this year, which if you haven't is okay, we see it a lot, you have kind of one more opportunity in Q4. So I mentioned January 15th is the Q4 quarterly tax deadline to make a payment to meet what's called safe harbor. So the safe harbor rule says that if you pay at least 90% of your tax liability for the current year, so by January 15th, you should have a pretty good idea of what you're going to owe in taxes, right? Because you'll have your full income for the year. You've hopefully caught up on your bookkeeping, so you know how much money you made and what your profit was. and then generally what your tax rate is, usually somewhere between 30 and 40%, depending on where you are. So if you make a payment that gets you within 90% of that tax liability by January 15th, then you'll avoid additional penalties and interest on those penalties when you file your tax return. You're still probably going to owe penalties and interest on the previous payments that you missed, but at least you're avoiding additional penalties from Q4. Now, if that sounds confusing, I don't know how to even get to that 90% of my tax bill for this year. Um, Another way that you can meet safe harbor is that if you make a payment that equals 100% of your previous tax year liability. So you'd want to look at your 2023 tax return and see what your tax liability is, just your tax bill. So how much did you pay in taxes? So as long as you pay 100% of what you paid in 2023, then you're going to meet safe harbor. For higher earners, which is the IRS defines as $150,000 or more in total income, you have to pay 110% of your previous tax year liability. So good thing to know there. Again, this is due by January 15th. If you want HERD to help with this, you would just have to join HERD by the end of November so we have enough time to get your bookkeeping records caught up and give you enough time to make that payment. The other way to think about how to avoid and reduce penalties is by filing on time. So there's two kind of major IRS penalties. The first is a failure to file penalty. So that's if you don't file your tax return by April 15th, or if you don't file an extension by April 15th. If you're not ready to file your tax return, I would recommend just filing an extension. It's free. I think it gives you until October 15th to file your return. There's no cost for doing so. With that said, filing a extension is an extension to file. It's not an extension to pay. And so the IRS is not going to let you wait until October to pay your taxes. They are going to want that money, unfortunately. And so what I would recommend is, if you're not sure how much to pay, or you just haven't saved enough during the year to pay your tax bill when you file, the IRS offers payment plans. I would recommend looking into that, because in addition to the failure to file penalty, there's also something called a failure to pay penalty. And so the failure to file penalty is bigger. Failure to pay penalty is, it also accrues over time too. And so every month it just kind of builds more interest. So what we recommend is, if you can't make the full payment when you go to file your taxes, pay something, because then the amount that is building interest is less, right? Because it's your charged interest and penalties on your outstanding tax bill. So if you can just pay it down, it's going to reduce what those penalties are. I'm going to stop here. Any questions?
Yeah, there's a few questions here. So one is, let's say you actually got a refund last year, or you really didn't owe much in taxes. How do you think about using this method then this year?
Yeah. So if you didn't owe anything, or if you got a refund, it's maybe because you were a W-2 employee, right? But those taxes are still being withheld from your paycheck. So you would still technically have a tax liability. You just never paid it, but it was withheld from your wages, right? So that's one way to look at it. And if you didn't, or if it was kind of a small amount, which is common, right? If this is your first year in private practice, like, and just as long as you're meeting whatever that tax liability is from the previous year, then you should be meeting safe harbor according to the IRS. Great. I'm going to keep us moving. About 15 minutes left here. Doing pretty good on time. Great. So finally, how do we lower our tax bill, right? There's some steps that we can take right now to reduce what we pay in taxes when we go to pay that tax bill when we file. So the most important one in lowering your tax bill is tracking your expenses, right? Because your expenses are lowering your profit and you pay taxes on your profit. Now, if you're not tracking your expenses or what we talked about earlier, if you're making expenses from a personal bank account, you're not going to get in trouble with the IRS, but you're going to end up paying more in taxes than you need to, right? You're going to be over reporting what your profit is. So it's really important to be tracking those expenses in a spreadsheet, in bookkeeping software, or through a service like Herd. This is just a screenshot of what your expense breakdown looks like as a Herd member. So we break it out by category for you so you can see it on a monthly basis, which is nice. Another strategy that some folks um, decide to use to lower their tax bill is making major business purchases before the end of the year. Now, what I'll say here is, don't spend $1 to save 30 cents. So what I mean by that is, if you're spending, say, $1,000 on a laptop for your business, which is a legit tax deductible expense, it doesn't mean that it lowers your tax bill by $1,000. And so just make sure that, you're not spending money just to pay less in taxes. These are purchases that say you would have made anyway, but you're going to make it by the end of the year to lower the profit for your business. Because ultimately, more expenses means less profit, which is less that you owe in taxes, but it's also less money in your pocket at the end of the day. You also can max out contributions to an IRA or 401k. There are contribution limits, but this contributions to a retirement plan like an IRA or a 401k reduce your taxable income in the same way as a business expense would. And then donating to charity. So donations to a 501c charity are tax deductible. They'll give you a form. You take that, when you meet with your tax preparer, whoever's doing your taxes. Any questions here? We could do a whole webinar on retirement planning. These are all kind of big topics, but these are sort of the big ones. I would say looking forward, as we think about tax planning, S corporation is a great way to lower your tax bill. But that's not necessarily something that you can do between now and the end of the year, right? So these are, opportunities between now and the end of the year to lower your taxable income or your profit for your business. So when we talk about business expenses, what are those? And business expenses are really tax deductions, tax write-offs. Those all mean the same thing. There are personal expenses that you can claim as a tax write-off when you file your taxes. But when we talk about business expenses, those are also tax deductible. And so just kind of running through this quickly, any advertising and marketing expenses, definitely a business expense. Business meals is a little bit of a nuanced one. You're able to write off 50% of those business meals. So this is a meal with a therapist or maybe a business partner. Just make sure you keep that receipt and have documentation of that. Business travel is a really great one for you to be able to take advantage of if you're traveling to a conference or a retreat, as long as the purpose of that is business, tax deductible. Continuing education, professional development, all of that. So, going back to making business purchases, maybe there's a really expensive training that you've been wanting to take. Sign up for that by the end of the year. Even if the training doesn't happen until next year, that expense is on your books for this year and it's going to lower your tax bill. Any software costs, Herd being an example, 100% tax deductible. Home office deduction, a little bit more nuanced, but essentially if your home office is your primary place of business and you have a space in your home or apartment that is exclusively used for business, so it can't be a shared space for personal and business, you're able to write off the percentage of business use. We have a calculator that Mel can share. That's a great way to calculate what your potential savings could be with the home office deduction. And then another one just to mention here is that if you're just getting started in private practice, you're able to write off, up to $5,000 in startup costs. So these are things like meeting with an attorney, meeting with an accountant, having a website built, any of the costs that you uh, make to start your business is considered a startup cost. And even if you're not seeing clients until next year, but you're making those expenses now, you may be able to roll those expenses over into next year, depending on when you officially open your business or start your business. So that's a little bit of a nuanced one, but a question that we get a lot this time of year. Then credit card processing fees, we mentioned that earlier. Just make sure you're getting your 1099K for those processing fees. Great. So that brings us to the end here. I wanted to throw this back up. So if you're interested in learning more about Herd and how we can support your business, we offer free consultation calls. I mentioned at the top of the webinar that this is our busiest time of year, really from now until the end of the year. And so these spots do fill up. So I would encourage you, if you're interested, schedule a call with our team just to also decide on your own if, Herd is a good fit for your business. And really exciting. We've never done this before, but we're offering tax season special pricing. And so with an annual plan, you get free catch up bookkeeping. So we'll get your books caught up for the year. If you're an S Corp or a group practice, we are offering free payroll for 6 months. And then you also get a free tax consultation with a tax professional. We'll, of course, provide your Q4 estimate, and you also receive the year-round services that we offer at Herd. On monthly plans, that discount is 50% on catch-up bookkeeping, 3 free months of payroll for S Corps and group practices. Great. We have about 7 minutes left here, so happy to take any questions.
Yeah, I think a few good questions, just reconfirming. So if I'm a 1099 contractor and this year I also started seeing a few clients on my own as a practice owner, as a LLC or sole prop, what do I need to be submitting for my tax returns? Just what form should I be submitting?
Yeah, so both your 1099 and your private practice income are both considered self-employment income, right? And so those will both be reported on your Schedule C. And so the Schedule C is where you report your business income and your business expenses.
And then on quarterly taxes, we had a few questions on what happens if I just wait and I don't pay all year and I just pay everything I own April?
Yep.
Is that an okay approach, or why not just do that?
Yeah, some people do that because just calculating estimates quarterly, it feels complicated. I'd rather just wait until the end of the year and just pay it when I file my taxes. You can absolutely do that. You're not going to get in trouble for it. The downside of that is you may owe penalties for not paying quarterly, and then you may owe interest on those penalties depending on, say if you didn't pay in Q1, then interest accrues from that deadline. So you just end up paying more in taxes than you need to. We always like to help therapists save money. And so we would recommend making those quarterly payments, at least meeting that safe harbor. And so if you do file your taxes with an accountant, something that they may do when you meet with them in January or February is they may ask, do you plan on earning the same amount this year as you did last year? What's your expected income for the year? What do you think? And based on that, they'll provide you with vouchers that have an amount for what your quarterly estimates should be. These are just estimates, right? But that helps you to meet that safe harbor amount. And then, you may owe more when you file, or you may actually get money back. Something to mention here is that if you actually overpay in those quarterly tax estimates, the IRS will refund you when you file your tax return based on what your tax bill ends up being. So I would recommend paying quarterly if you're able, but also recognize it's not always possible, and that's okay too.
And then a good question just on how do you know if you should think about becoming an S corp? Just talking, about taxes and ways to save.
Great question. We have a whole webinar on understanding S corps. The short answer is that S corporation is a tax structure that benefits higher earners. And so what we've seen at Herd is that therapy practice owners who are making $100,000 or more in their business, that's total income, um, might benefit from being taxed as an S corp. The reason why there's that income threshold is because there's also expenses that come with being an S corp. You have to file an extra business tax return. You have to form a business entity if you don't have one already. You have to pay other fees, accounting fees, et cetera. So you also have to pay for payroll. So there's other costs associated with being an S corp. So, if you're under that 100K mark, then it may not be beneficial. You might save a few $100s a year, which just isn't worth all the extra headache of being an S corp. But if you're over 100K or well over 100K, definitely consider and look into S corp for next year. There was I saw a question here about beneficial ownership information. So I've seen in therapist Facebook groups and just online, a lot of people asking about this BOI report. We actually have an article on it. And essentially it's just a new requirement from the federal government for people who are business owners. So these are people who have a business entity, and that's if you have an LLC or a PLLC, maybe you have a professional corporation. You just have to submit this form online that clarifies who the owners are of your business. It's very quick. There are like fines if you don't fill it out, and there are specific requirements of when you need to do it by. My understanding is if you formed a business before this year, you have to do it by the end of the year. So another thing to do before the end of the year, and the Mel can link to that article. But don't stress about it. It's pretty simple. It only applies to folks who have a formal business entity in their state. So if you're just operating as a sole proprietor, you don't have to worry about it. Amazing. Anything else? Looks like you answered 103 questions in the Q&A. So thank you, Melanie, for your support. And thank you everyone for being here. We're at the top of the hour, so I want to let you go. We'll share out the recording, or we'll share out the slides. Really appreciate you making the time with us on a Friday, and we will see you soon.